Welcome to the Growth Ventures Podcast, the go-to platform for entrepreneurs, innovators, and changemakers. I'm your host, Hamlet Azarian. In this podcast, we delve into the world of business, technology, and innovation. We bring you conversations with industry leaders, disruptors, and visionaries who are shaping the future and making a difference. So whether you're an aspiring entrepreneur, a seasoned business owner, or simply a curious listener, join us on the journey of learning and growth. Welcome to the Growth Ventures Podcast. And now, let's delve into today's episode. Welcome back to another episode of the Growth Ventures Podcast, where we dive deep into the journeys of visionary entrepreneurs and industry leaders who are redefining the way we think about business and growth. Today, we have the truly remarkable guest on the show, Adam Robinson. Adam's not your average founder. With a degree in economics and Spanish literature from Rice University, he started his career in high-stakes world of finance at Lehman Brothers and Barclays, cutting his teeth as a credit trader on Wall Street. But unlike many who stay in the safety of the environment, Adam made a daring leap into the world of tech and entrepreneurship. His first venture, Robly Email Marketing, was a bootstrap success story, and he continued that winning streak with Retention.com, a company that rapidly has grown to a 22 million ARR SaaS powerhouse without a penny of venture capital. His ability to scale and innovate is nothing short of impressive. Today, Adam is here to share his incredible journey from Wall Street to building multiple startups, his insights on scaling a SaaS business without outside funding, his unique approach to leveraging LinkedIn for massive growth, and the lessons learned along the way, including the moment his team nearly lost a 10 million sale because of a single mistake. We'll also dive into his new venture like the B2B product under RB2B and the $1 Billion Challenge docuseries that's capturing the imagination of entrepreneurs everywhere. And of course, we'll explore what's next for Adam as he continues to push the boundaries in tech and entrepreneurship. So without further ado, let's get into it. Adam, welcome to the Growth Ventures Podcast.
Thank you for having me. Happy to be here.
Of course. Adam, before we get to all of this, let's start from the beginning. So you were in college. Tell me how you got into Lehman's and Barclays, why you chose finance as your career. What were you going through at that time, and then what kind of led down to that path for you?
So I thought that I wanted to be an entrepreneur, and in 2003, that was not something that you could just do right out of college. You can now, strangely, which I'm not sure I totally understand, but like you can. But it wasn't something you could do then. There were basically like if you did really well at school, where I went to school at Rice University, you could either go down and you wanted like one of these high profile jobs. The two most high profile paths were consulting and investment banking. I didn't even know what either one of those meant, but the consulting firms like Boston Consulting Group, Bain, they marketed themselves as kind of like a track to being an entrepreneur. So I really wanted to do that, but then I didn't get a job at any of them. And I knew I just wanted to make money also. So one of my buddies was like, yo, I had an internship at Goldman Sachs this summer. I worked on the trading floor. You'd love the environment. You should try to like get there. So somehow, I think at the time my brother swam at Stanford, and like his teammates' dad ran investment banking at Lehman Brothers. And so I think I was like kind of like ushered in the back door in Manhattan. Like at Rice, they hired you for the Houston office, but like somehow I ended up with a job in New York. Just I don't even know. Right. And then a year later, I was like on the trading floor doing this like credit default swap stuff. And that's really how it happened. It was a great job to have. At that time it was like legalized gambling.
Like early 20s, maybe?
I did it from when I was like my early 20s to like 30 basically.
Nice.
Made a ton of money, saved a ton of money. The whole world came unraveled in front of my eyes. Like I was literally working at the company.
Were you at Lehman's during the...
Yeah.
You were? You were. Oh, wow.
Like literally the day it went under, I walked out the door of Lehman Brothers.
Oh my goodness.
Yeah. And then, the business that we were in was like a top 3 shop on Wall Street. So Barclays bought the people in the building, but not the liabilities. So we just went like right back to the building that we were in. Same floor, same seats. They blew out all of their people that did what we did and replaced them with us. Got paid huge bonuses that year. It was bizarre. And I did it for a couple more years. And then a lot of change happened. It kind of like got super regulated what we were doing, and the risk tolerance went down a lot. And it all of a sudden like was a shrinking environment instead of a growing environment. And I made a bad career move. I like moved to London because my boss thought Europe was going to come unwound just like the US did. It never happened. And then that didn't work out. So I came back to the States, and I was in this position of like, okay, I could like take a job at a tier 3 bank and something I don't even really like to do, or I could go try to pursue this dream that I've always had. And meanwhile, one thing I didn't say was the first day I showed up in Manhattan, my roommate was building this website called Vimeo in the apartment I was living in.
No way.
Yeah,
You're kidding
in
me.
the like, dude, Dreamweaver. Do you remember the app to like
Yeah, of
make?
course, of course, of course.
He was building a baby blue homepage on Dreamweaver that said Vimeo in cursive at the top and had like cartoon drawings on it. I was like, "What's that?" He's like, "Well, man, it's like this thing where like you can upload video and like share it with people." I'm like, "Why would you want to do that?" You know, like what is that? You know, because it's like 4 years before an iPhone, right?
Right.
So they're building it in 03. They launched it in 05. And then like they were kind of neck and neck with YouTube. And then there was literally a moment. So like it was inside of this company called College Humor, which was like a publisher site. And Interactive Corp ended up buying them shortly thereafter this happened. But like they were concerned with like copyright. You know, they were like not allowing other people's stuff to be uploaded onto the platform because they were just like some bootstrappers that were like paying themselves 50 grand a month and they were 20-year-olds, you know, like it. There was literally a Sunday morning when someone took the video Lazy Sunday, Adam, whatever his name is, on Saturday Night Live, uploaded on YouTube, and that was the breakout moment for YouTube. And they wouldn't let content like that get uploaded because they were worried about getting sued by these big entertainment industries. And YouTube went straight up and got bought for like $1.5 billion. And look, it ended up being fine, but like it was a much longer journey to a much smaller outcome. And ultimately it was IAC owned it anyway. But anyway, I watched these guys live this, I don't know how else to describe it other than sort of like an MTV Cribs type life. Like it was just like, they were just doing this cool shit with these cool people all the time. And they had like such, you know, young, interesting people working for them. And it just
Were they
seemed
coming to
like,
your apartment, or they had a different
so
their
so
place?
they worked in my apartment for 3 years, and then they got this like amazing. It was like almost like I just keep referring to movies. It's like that movie Big, which is
Yeah.
like it was like they were working in a place that looked like that. Our apartment kind of looked like that also, by the way. But like you know, they had this incredible office on Union Square. It just was so different than like putting a tie on and like getting to the office at 6 a.m. Like, you know, it's still dark out. It's dark when I left. Like I was like running across the Brooklyn Bridge every day at like 4:30 a.m. It was crazy. But it planted a seed. Like there was, I didn't even know why I wanted the life that they had. Cause like to me at the time, and it even took a while to realize all this, but like it was kind of just Wall Street makes you just think it's all about money. Like that's just like the value system you're in there. But like there still was this kind of like, I want to make the same amount of money, but like not work for somebody. And I thought that that was it. And like, that's part of it. But like, now I know, of course, it's about building, right? Like
Right.
you know, it's about like putting, you know, getting a bunch of people coordinated to focus on something and then like watching that go from nothing. For me, it's like the most rewarding is like going from nothing to something in this like incredibly short period of time as a result of like being able to like organize all of this stuff, you know, like,
That's amazing.
yes.
So in that time, obviously, here you were watching Vimeo and watching your roommate work on a project that he clearly was passionate about. And at the same time, you were seeing something with YouTube blossom and grow and scale. But you were doing well too, right? You were going and working, and you had, in most people's viewpoint, the ideal job in New York, right? Like working
100%.
at
Yeah.
one of the bigger firms. What were you learning on your own personal journey about this? Obviously, you learned you wanted to build something later on. I'm sure that wasn't at that point. What growth do you think you went through in that early 20s that
Yeah. So like
later on allowed you to become as successful as you have?
when that journey was happening. So when I got there, nobody was doing as well as like there weren't like people in their late 20s making millions of dollars when I got there. The guy who ran the desk was commuting in from Connecticut. And I was like, this doesn't look like something I want to do when I'm 40. You know, like my parents lived in Connecticut, that whole train thing, it just to me, still I think about it and it just makes me sad. You know, like it's very difficult to have a good marriage. I would say almost no one did who was living that life. Barely saw their kids. These guys were still playing golf on the weekend somehow. You know, it just doesn't even make sense. So, but like that, you know, that's kind of like professional services or whatever you want to call it. But then by the time I was in my late 20s, it's like, holy shit, like this is, I'm living in Tribeca and like probably going to have a house in the Hamptons and like send my kids to these private schools. Like I can do that, you know, like that's very different than like schlepping in on like the 5:06 a.m. from Darien or whatever,
Right.
you know? So, and then it kind of changed. It was kind of more after the financial, and by the way, I got pushed out as well. You know, I made a bad career move and it was hard. It was hard for me to get the situation that the situation I had before was not even available. And this very strange thing happens, I think, with like money where like, if you get paid to do something way more than you ever should have, and then all of a sudden it's back to what it should be, you're like, I don't want to do,
I don't want to do
you know,
that anymore. But
yeah, it's like that. This isn't where, you know, whatever. And plus like, yeah, it's like there's the expression "fuck you money," right? And like,
Yeah.
it's different at different phases of your life. But when you're a single guy, that number's not that big, you know? And it's like, I had hit that point where like, I'd watch these guys develop their entrepreneurial career long enough. And like, I kind of had enough saved and I was like, I never went to business school. I'm going to take this money and I'm going to figure out if I can do this tech entrepreneur thing. And there were like a few other people around that time that did it. And a couple of them succeeded. Most of them kind of did not. And like, what I would say is like, in a way, I wish I had less money than I had at the time, because I think that an early stage startup with a first time founder consumes every single dollar available to it, because you're
For sure.
delusional and you don't know what you're doing. And like, you're so inspired and like, you know, like, so your question was like, what skills did you get? I think honestly, the skill that I got from that job, there's a guy said it well. It's like, I learned how to talk to adults, you know,
Yeah.
like I learned, like, you just kind of have to be very sharp, you know? I did not, strangely, which after I torched myself a bunch trying to be an investor, I did not learn skills in investing, especially not an early stage venture, which is how I lost most of the money that I tried, you know, investing. And now I don't, I just buy SPY, you know, maybe some Bitcoin or whatever, but like, I hate investing. Like, I don't want to sit there and get pitched all day with like ideas that I think suck, you know, like in like some weird early stage deal where I probably will never have control and get jammed down to zero, like no matter what, by somebody at some point. So yeah, like, you know, I got really good at spreadsheets early in my career, which is a good skill now, even still. Like, I don't do financial modeling, but like I really understand it. And man, I don't know, like I got really caught up in like crypto at the highs, even though I knew it was a super bubble. Like I made a ton of money buying the fear right after 2008 and 2009. And I thought, I have a unique skill at this. I will be able to identify, be greedy when others are fearful, be fearful when others are greedy.
Right.
I really screwed up that last part in this last bubble. You know, it didn't like cart me out or anything, but like, I knew what was going on in my heart of hearts. And I was still, it's like, just when what happens, I think, with crypto is like, you get pulled into learning about it at the highs because everyone's talking about it. And it's so revolutionary and it's so reasonable, that like the promise of it all.
Right.
So you kind of get sucked in. I mean, we're off topic now, but like that, well, all that is to say is like, I do really understand, like, and we'll see if I can do it again, but like buy when others are fearful and, you know, sell when others are greedy or whatever, and like what the signs are and stuff like that. So that's helpful.
But let's bring it back a little bit. So
Yeah.
you now, you know, you left finance and you started your first venture. This was Robly email marketing.
Yeah.
So tell me, this was bootstrapped. Obviously, you had some capital that you had made while working in
Yeah.
finance. What do you think led to its path of success, and how were you able to grow it and exit out of it without having the traditional venture capital financing? This was your first real
Yeah.
bootstrap business, right?
That is correct. I tried to do a bunch of stuff at the time, and that's kind of what worked, you know?
Yeah.
And like, this is crazy to say, but like, I think really the only reason that it worked is because this other guy whose business failed showed us how to find constant contact customers on the internet. Like, it is like like pre-built with. So he raised like 20 something million of venture, and he figured this out too late in his journey, and he had too much cost to like make it support his business. But he's like, dude, like if you just want to like get a lean bootstrap business going and figure out what's next, he's like, they got hundreds of thousands of customers and they're leaving this digital trail. And there wasn't, you know, nobody was, the market of web crawlers was not what
There,
it
yeah.
is today,
Yeah.
right? So we were able to like, just literally based on that tip, you know, it funded all of the other stupid stuff that we did. Build way too much product, not talk to anyone before we launched the product, you know, just all of the
All
stuff
the
that
mistakes, all the
all of the
mistakes.
stuff that I know to do now,
Right.
which took me a good, you know, better part of a decade to learn, right? Having that much, if you want to call it, the investor would call it margin of safety, right? If someone's just like pointing you towards hundreds of thousands of customers and you need like 3,000 of them or 2,000 of them to make a sustainable business or whatever, we ended up getting 5,000 of these like 250,000 leads that we had. And we just go in there, you know, eventually it turned into like a call center where we were calling people, leaving them a message being like, I'm calling about the constant contact account. So they call us back and we just be like, hey, do you want 50% more opens for half the price? And they're like, what? Yeah. And then we like get them on a demo and like, sort of like, you know, kind of, and this was like, you know, we were getting $15 a month out of people originally. It got up to 60 by the end, but
Wow.
like, that tells you how good that list is, because you can't do that. You know, you can't sell a product, a SaaS for under, I mean, I don't even know, $500 for the inside sales, all inbound or whatever. So yeah, that was that. And that is literally the only reason why that worked. And then once that stopped working, there was no way we could get customers. It was such a double-edged sword because it was only a competitive product within that channel that no one else was calling, right? Like MailChimp dominated the rest of the internet.
But
With
there's
their,
something you shared in that story, so it sounds like there was an element of cold calling involved, clearly. So,
yeah,
and do you think your experience at Lehman's maybe helped a little bit with that? You were able to lead a team to be able to pick up the call, figure out what the
dude,
messages to get their attention.
I was just
Yeah,
like reading books, like cold calling that works. You know what I mean? Like I
yeah.
was just trying, like
You
it
were just
was,
consuming the information and trying it
yeah,
out and see what works, doesn't work.
horrible. Yeah, it was very terrible. Um, And I never want to run a business like that again, by the way. Like I'm like all about this like inbound lean as possible. Like call centers are tough businesses. It's like high
So,
churn, high, you know, it's like you're kind of selling these people a dream and then like you're kind of cutting people all the time. And it's really, in my opinion, it's really hard to interview salespeople. Especially that, you know, 200 dials a day. It was just like a hard job. It was bad. I mean, whatever.
and then you
Me-
exited that, obviously. You got it to a point where you're like, was it, I'm done with this business,
so
or this is
so
no
it,
longer fun, or
so like, look, like it was always like, how am I going to grow this? And then at one point when the calls thing stopped working, I'm like, I need to like do marketing. I ain't really knowing what marketing was. And I'm watching a digitalmarketer.com, like literally like they're like marketing, their first class on marketing. This dude, Ryan Dice, is like,
Yep.
if you cannot fill out this value statement card about your business, do not do anything else. So like the value statement card is like, service, like business X helps Y with Z. And I like could not come up in my, like, I had, at least by this point, I had like appreciated how valuable being different was. Like in the beginning, I was like, oh, we'll be the same as Constant Contact, but cheaper. Right. And then I just learned over time that like the more different you are, the better that is for the world. Because if people think they're listening to something the same, they gloss over, right? So
Right.
that's a principle that I just like try my hardest to adhere to now. Just like if everyone else is over here, I'm trying to be like as far over here as possible. So, and I also had learned that being as brutally honest about my business rather than like euphoric about or whatever, like ego tied to it, like the honesty is what helps, and like embracing the reality of the situation. So there wasn't a single thing that I could say about Robly that was a reason that our users should use it instead of MailChimp, which was free for 90% of our users, if they even knew about MailChimp. So like that's just a horrible feeling, right? Like I just remember
Right.
the moment I was sitting on my brother's couch over Thanksgiving one year, it's probably 2016. And I was just like, this is fucked. Like I have to figure out how to do something different than MailChimp is doing. But like, dude, that thing that they put together was just unbelievable. It's like a free offer for 90% of the market, when no one else was doing that or even could or even believed in freemium yet. They thought it
Yeah.
was just like a gimmick until they realized that
They got me. I definitely signed up for the free offer. I was like, okay, let's try this
yeah.
out.
No, it's incredible. Free is the most powerful thing in the world. And by the way, I'm doing it now. Like I'm so deeply affected by that, by watching that thing happen, and it led to a series. So we were stuck at 3 million. We got that strategy got us to 3 million ARR. And the email marketing space is interesting because it's a really good space for like net dollar retention because you charge people based on their email list size. And for the most part, people's email lists grow
Right.
for the most part. So you have this, even in the SMB space, you have a revenue expansion element that's like offsetting the customers dropping. But like still our business was like shrinking customers 1% a month and like kind of staying flat. Maybe we'd like figure out a way to raise prices or whatever. And that's not a good situation to be in. Like gross retention shrinking, not good and like whatever. So I was stuck at that place for 3 years. And that is emotionally hard. It's like hard for your ego. It's like you're listening to people like me now. You're like, what does he know that is he better than me? Like, am I just not?
My stuck. Why can't I go past this?
Yeah. Am I just a $3 million? And literally like, so trying to figure out how to do stuff that MailChimp was doing, I made two really big swings. One swing was like building, this is just crazy to me now that I thought this was a good idea, but like building another entirely different email marketing software to go above MailChimp that wasn't, or just what the fuck, like two different things. That was 1 year and like $1 million and just literally deleted the code. And then the next attempt, like the company Constant Contact, they cut this like boots on the ground software distribution effort that they had when they got acquired. And then the guy who ran it reached out to me. He's like, yo, like, you kind of made a lot of noise in this ecosystem. This was like, they spent $50 million in this program. You could probably just like swoop these people up.
Wow.
And then it was just like, it was branding, it wasn't positive unit economics. I found that out. The guy who, he was like one person below the person he would have had to have been to have known that,
Yeah.
and like you can't, 3 million ARR startup does not do branding, right? You do positive unit economic customer acquisition. And it was a disaster. I got sued by them for hiring. They hated me for all the stuff I did in the beginning, and I got sued by them for like hiring. Hopefully none of them are listening to this, the executives. Maybe they are. I don't know. I don't, maybe they moved on. Maybe I'm going to get a cease and desist for this podcast. We'll see. But this was years ago. I think there's like only I think there's like a 3-year statute of limitations on it or whatever. I can talk about it now, but it was a disaster of a whole other year. And then, sometime during that, I'd heard about this identity stuff, had no idea how to do it. But I heard that there was a way to get an email address for someone, even if they didn't fill out a form, and that it was legal in the US to do that. And I was like, that was a shocker to me.
Right.
But I was like, man, like if I could figure out how to do that, I just feel like I could sell that to literally anyone. And then, really what, I was like, we were trying to launch that other email app at a trade show, which was like, I written on LinkedIn about my rock bottom moment. It's like day one of the trade show. I just remember it like it was yesterday. No one cared about this like upmarket MailChimp, eyes glazed over.
A
I'm
year
like
into it, you're like,
yeah,
oh,
I'm like laying in bed. This is the launch, right? I'm laying in bed with my wife. I'm like, no one like, and we didn't talk to anybody, right? It was just like all of the mistakes, and like, the next day I wake up, I'm like, whatever. I don't know how to build it. Like, I'm gonna go around and just ask people if I can get them email addresses from people that didn't fill out a form. Like,
talk
would
about
they,
like legitimate customer discovery. Like, I don't even
would
have
they
this
want
product
that?
built.
Yeah, would they want that? And sure enough, like every single one of them was like, yes, I want that. And by the way, so like the signal was so
Is this
strong.
RB2B or is this retention?
That was
Which one?
retention. That was retention.com. The
Retention.com.
original plan, this is kind of a long story. The original plan was to make it a feature in Robly because I knew MailChimp couldn't do it because they couldn't sell data and be part of this self-regulatory group that they have to be in. If they get in, like, if something happens to Gmail, they need somebody over there to call. So like there's this self-regulatory organization that they're a part of that doesn't let you sell data. So I was like, this is the feature that I can do that none of the big players can do. And it turned out that, in a bizarre sort of product market fit thing, people were like signing up for the ESP, only using the identity feature, downloading the file and like putting it in Klaviyo and saying it was awesome. Right. So
Wow.
like, that was like a good sign, right? It's like, oh, this is not a good way to grow this email app because the email app was just like, there's a million reasons why it's so far behind. But like, if I spun it out and connected it to everything,
Did you see that in the data already, or had you seen that, or you hadn't seen that behavior in the data that they were doing that?
No, like we observed people doing that. Like like not using the rest of the platform, staying on the platform they were on and telling us that it was like awesome, enduring a very bad user experience and giving it like a 10 NPS, right?
Wow.
Yeah. So, and look, it hasn't, one thing that I learned in 2023 is that different software categories have different sort of like intrinsic churn characteristics. And whenever you're trying to sell leads as a SaaS, that will be one of the highest churn spaces that you could go into. I warn anyone who's contemplating doing that. It doesn't mean they're bad businesses. It just means they can't get huge, right? Like businesses that get huge are typically systems of record, like CRMs for e-commerce, email marketing applications, Intuit QuickBooks, right? Like something that if you were to get rid of it is because either you're switching to a competitor or your business went under, right? Like, whereas a source of leads, no matter how good the leads are, there's 8 reasons you'd cancel a source of leads and your business doesn't change. Like everything else is still ticking. So from second one, it used to be called Get Emails. It's now called retention.com. The business grew incredibly fast. It grew incredibly efficiently. We got from like 0 to 10 million ARR in like 2.5 years and distributed $5 million to the founders getting there, right? Not only did it not consume cash, we paid ourselves $5 million getting to 10 million ARR. So, but like now it's at 21 and we sell this high churn product category to big Shopify stores, which are still small businesses. They very much buy like small businesses. And it's just hard. Like we're trying to go up market, which, if we can sort of like replace the Shopify revenue with a mid-market buyer, they'll never rip it out just because of like how slowly they move and how they're looking at it versus like how the Shopify guy's like, you know, if you show me a comparable product for $5 less per month, I'm switching in 1 second.
Right.
You know,
Right.
like, yeah. So like, so yeah, like, you know, it's a great business. It's like a super, you know, it's 21 million ARR and we have 30 people on the team now running it. So it's like, obviously it is unbelievably profitable. We hardly do any marketing because like, I don't see the effectiveness of it. And I just like refuse to do, it's like, maybe if we like really make a splash in mid-market, then some of the big spend stuff, like the trade show stuff or whatever, like
what did you do to scale it? Obviously you had the trade show where it was the aha moment that, hey, there's a huge demand for this. And it sounds like you did a platform hack with Shopify, right? Like becoming part of their app ecosystem. Are those
we
the
weren't
two
even
major
really
things?
we weren't even part of their app ecosystem. And to be honest, we didn't even focus. Another part of this emotional journey was like that company got stuck at 3 million AR for 9 months also. So
Oh.
like it took
Am I only
a
good
year.
for 3 million? Is that
Yeah,
right?
yeah. No, dude, like I can't even tell you, like, so like it took a year to get to 3 million ARR. And then the churn was so bad because we hadn't focused on e-commerce yet. We were letting anybody sign up and it was self-sign up. And we kind of thought that the market for it was different than Shopify stores. We thought it was like affiliate marketers. The churn was so bad that 9 months after we hit 3 million ARR, we were still within like 100K ARR of 3 million.
Wow.
And I was like, fuck this business. Like, I'm so over it. Like, what's something, so like, and this is really the best story that I have in my repertoire of stories. So like, I'm sharing an office with Dave Rogan-Moser, who started Jasper AI.
Jasper, yes, yeah.
For 2 years before they started that company, it was their team. And then I just rented a desk from them. And every day, you know, we were both some schmucks stuck at 3 million ARR. And then I started this second one, like in their office, right? And then it got to 3 million ARR and got stuck. And they only had this one at 3 million ARR and they had a lot more employees. They like raised some money from YC or whatever after YC. And then COVID happened. They were literally out of dough. Meanwhile, I have 2 startups that I, you know, own whatever, like 45% of, that I have 6 employees on each that are both spitting off $1.5 million. And I'm like, Dave, we should be doing this, right? Like, what if we get 2 more startups that are 3 million ARR and just like spitting
The
off
venture studio. You're now building a venture studio.
Yeah. And I'm like, you know, what was interesting about what I thought that was interesting about mine is that we built the ESP on top of SendGrid, right? It was just a UI on top of SendGrid who did the sending.
Yeah.
And then we built, at that time, now we have identity. We have this whole waterfall of identity, you know, whatever. But like we had kind of like built it on top of the smart tech was like someone else's. But like they were incapable of creating a usable user experience. So I was like, maybe distribution is our thing, right? And that's what we should be doing. So like, I'm like, we should be spinning up a couple more of these things. And like between November and January of, that was 2020, I guess. This is all we were talking about. And they were running out of dough. They were like, dude, like maybe we'll just sell proof and like, we'll take 500K each as the founders and like go start a restaurant or whatever. And I'm like pitching this idea to them hard. I'm like, go find someone who's got a super smart technology, but like doesn't know how to distribute and do that. And he's like, I have this text message on my phone. He's like, he sends me a Stripe receipt for $100. He's like, I think I got it. Like OpenAI's got this thing, ChatGPT.
Yeah, this is like
you know,
November,
we came up with
December.
this, yeah, we came up with this, you know, 7 days ago. Like maybe, and by the way, like get emails, I think at that time was at 260K MRR. He goes, maybe this is my get emails, right?
Right.
And then like I just kept talking to, you know, it was like at 500K MRR, like 6 weeks in. I mean, something crazy. And like by,
I think they were called Jarvis at that time, maybe.
Jarvis,
Jarvis.
Yeah. And it was 0 to 50 million ARR with hardly any team in 12 months, basically. And they have all sorts of problems now, but like, to the founders out there, like I always say, like, I would listen to people talk about unicorns on podcasts, and I never thought that it applied to me. but literally sitting there watching those guys from Maryland do it across the office, who were both stuck for the 2 years that I knew them, right? Like, just like I was in the same exact spot, like something about watching that happen emboldened me and made me think that I had it in me too. And so anyway, I like really tried and sort of whiffed for the churn reason. Really, it's like it just didn't fix itself like I thought it was going
How
to.
did you get retention to break out of the 3 million? How did you finally get it at
Really
20?
what it was honing in on that audience of very large Shopify stores, because it did not make our metrics look like Klaviyo's, but it made them a lot better than they were.
Okay.
You
So
know,
were you just producing a lot more content, showing them how to utilize it? Was the
so
content driven approach, or what was it?
so really it was like the product was very good and it worked, and it was very different,
Okay.
and nobody kind of knew how to do it, and like nobody was really willing to do it. It's to do what we do, you have to be willing to have people call you a scumbag. Like there's a small percentage of the world that's like, you are horrible. Like there's people who really care about data privacy and they're just like, you are a scumbag. So like, and then like there's dubious EV, because why would you buy one of those businesses that has that, you know? So there are a lot of reasons why people weren't doing it. So it was very different than everybody else. And we knew how to onboard people in a way where it worked. And
So for people who don't know what retention.com does, what you're able to
yeah, it's
understand
like,
who's visiting what site and pretty much identify
yeah.
them, right? Is that
So yeah, the most of the identity now is actually like totally above board and first party. You would say it's like us deploying these really long life cookies based upon signals that people make, but it's identity resolution of anonymous website visitors. So some of it is like third party publisher network. You like kind of opted in somewhere and you're getting, you know, tracked across websites in a legal way. But like, yeah, retention.com, it helps people send more emails to anonymous website visitors that are doing stuff on e-commerce sites, like abandoning cart, abandoning product, abandoning whatever. Super lucrative workflows. We help you get more of them out by making someone no longer anonymous through 10 different ways, right? So like, yeah, that it was literally the demand gen vehicle was word of mouth plus cold email, you know,
and
which
obviously
kind
it
of like,
worked, right? Like obviously
yeah,
you
it really worked. And then
it
my
worked.
partner Diana did like just thousands of 15-minute demos. It was very easy to explain in its early days because we
Yeah.
didn't have this complicated stuff. It was just like, we'll get you an email if someone hits your website. Then you send them a welcome series and then they come and buy. Sweet. You know? And then the product got much more complicated as we honed in more and more on the use cases of this large Shopify store. But yeah, that's what that.
Were you competing with someone like Clearbit, or this is more RB2E,
So
right?
RB2B does what Clearbit does, except instead of just stopping at the company, it uses the same, let's call it gray area technology, if you want to call it legal, but like people might raise their eyebrow, right? It uses that same technology to get to the actual person on the site.
Okay, so let's talk about that. Here you are, retention.com has grown to 20 million, and it's the new hurdle that you've stuck at, right? And then at that same time, you decide to build RB2B. You're pretty much further along in your journey. You've had a couple of whiffs. So how did you do this differently? Because obviously the growth of RB2B has been phenomenal. So can you talk a little bit about that?
So when I thought that retention.com was going to be unicorn twice over based upon the metrics that I was seeing, I was like, we have an awareness problem. Our penetration is very low into this market. What's the quickest way to generate awareness? And in my mind, like I'd read Dave Gerhardt's founder brand, it's like a personal social media profile is the way. So then I'm like, how do I do that? And I was just talking to as many people as possible. There's this company in the Shopify space called Triple Whale that was doing a great job on social.
Yeah.
So I was kind of working with their team.
Analytics platform, right? Is that what they do, or?
Yeah.
Yeah.
It's, you know, and by the way, I'm positive they're just in the same, except they raised like $100 million. They're like right above us in revenue and like they're dealing with all of the same issues because like it's not a system of record. And so like they got so big, mid-20s ARR, that like and they kind of churned through the entire ecosystem of people that would pay them a couple $1,000s a month. So like again, I'm sure no one is as honest and transparent as I am on LinkedIn, but like the struggle that a lot of people are having in 2023 and 2024 is like everybody was buying software like crazy a few years ago and they got big, and now for a lot of reasons it's just hard to outpace churn unless you're one of these super sticky revenue expansion spaces, which like Klaviyo still is, right? So anyway, they were doing a great job on social, and I was like, guys, I'll teach you how to do this cold email thing if you teach me how to do the social thing, because they weren't doing it. So the decision was to start along this path of starting to create on LinkedIn and then go over to Twitter once I got the LinkedIn down, 10, 20,000 followers or whatever. And then I was losing enthusiasm. You know, it became clear that it was not a unicorn twice over sometime in early to mid 2023. And really the summary is like, I thought we were going to have revenue expansion in year 2, and it was just contraction for a lot of reasons. Competitors showed up, like there's a million reasons people ask for a lower price. No one ever asked for a higher price. If you try to raise it, they'll just go some, it's just a nasty dynamic. And yet the LinkedIn content was actually starting to be pretty good, but it like wasn't generating e-commerce leads. It was doing a lot of other stuff in the e-commerce ecosystem, which is why I advocate doing something on LinkedIn, regardless of whether your ICP is there or not. Like people are researching your company, and when they do, they research the CEO and they look at the LinkedIn profile. And if you can provide them a way to an automated trust building engine, like it is well worth the time it takes to do that, right? Like in the modern world, right? You know, anyway.
What do you think does that? So, I mean, obviously you're very transparent,
dude,
honest.
but like I'm doing something different. I'm like kind of giving my whole life to this because of what it's giving back to me. But that was not always the case.
Yeah.
Here's an example. One of our customers on the DTC side is this guy, Curtis Matsko, Matsko. Go look at his LinkedIn profile. Maybe he gets 30 likes per what. I'll tell you what he does. Once a week, he sits at his dining room table and his assistant's behind them, and they have this like cool dynamic. They open his laptop, they hit record, they do 8 videos in a row. It takes them 30 minutes. And that's their next week and a half of content on whatever. No strategy, no kind of like whatever. He has gotten in 2 years 3 C-level executives that he has hired who came in inbound. He is getting his debt issue refinanced for free by an investment banker doing a ton of work for him that just wants the deal someday when they go sell because of this. People hit him up all the time. So I just saw him on Saturday. They had an opening of a store in Austin. He's like, dude, like, this is amazing. You know, he just thinks it's amazing,
right,
what this is doing for him. And like all that it's doing is it's giving people who want to learn about Curtis, they can sit there and watch 5 2-minute videos and they have a very good sense for him, who he is and what he cares about. Right. So that is the power of it. That is why it's worth having something there in a very, it's like a landing page about you, which equals your company in the eyes of investors and recruits and partners and all of that stuff. So anyway, but like, I'm going crazy because it's the great, you know, for if you're selling to revenue people in SaaS, then it's like the greatest, you know, thing you could ever do. So anyway, before we even thought about making a B2B product, I have this LinkedIn consultant, and my LinkedIn game started getting really good, but just not sort of generating leads in the middle of last year. I was like, dude, what if I started writing instead of to e-com people, which I was always conflicted about. I'm like, why is somebody going to like want my e-com content? I don't know shit about it. I've never sent out, I don't even know anything about e-com email. I only know about e-com cart abandonment identity problems, right? Like That is not something that an e-com guy cares about longer than the 1 second it takes him to solve the problem.
How often
right?
can I write about that?
Yeah, no, you can't, right? So it's like, and then like, I'm like, the people who they'll listen to are the people who own the stores who are creating content or own agencies and brands and are creating content and this, that, and the other, right? It's not me.
Right.
So I was conflicted about this, and it's a problem. If you're, it's why like I wouldn't spend as much time as I spend on it if that was the dynamic. If you aren't your ICP, then this should never be your whole life, but it should still be something, because you
Right.
can create this inbound trust building machine, which is very important for other parts of your business. But like, before we even had decided to build a B2B product, we were thinking about it. And I was like, Alec, we're thinking about a B2B product. What if I started writing to SaaS revenue leaders instead of e-com? He's like, all of my clients are in that position. With what you're willing to say and how much you care about this, I am confident it will crush and we could get you on the phone with anybody. We originally thought it was going to be sales led, like kind of mid-market or whatever. And then, I mean, it's crazy. It's like, it's the accumulation of like the learning of the past year of posting. But like day one, I wrote a post about how BDR teams didn't work anymore and how we cut ours and growth sped up, right? My posts were getting like 30, 40, 50 likes. It got 3,000 likes. And I was like, holy shit. Like we were like in Santa Fe, like doing a live work vacation or whatever, and with some friends. And I was like, guys, like I just went like viral on this like LinkedIn platform. Like, and I kind of think I understand why it went viral, right? Like this weird, it was the first time I'd ever had a hot take, it's like something that like really, I knew people were talking about because they were asking me about it. And like, yet you couldn't write something about it because like that means your employees were going to get scared that like the team was going to get whacked. And like, it's so hard to internalize that you have a big team that you're going to have to get rid of and is super unproductive because of like how painful that is. Right. And then what's that?
It's incredibly tough, right?
So it's like, I'm like, oh man, like if I can manage to write about stuff that like I would only tell to my wife, then like, and I know that it's going to strike a chord with the market and everyone's thinking it like that post's probably going to do well. I think so. Like I chunk my posts when I write them. I do them 3 at a time. Yeah. So like we had like, it was 6 p.m. We had an 8 o'clock dinner. I'm like, I got to write my 3 LinkedIn posts for the week. So I go write them. And then I got done and I walked in and I'm like, guys, like if these go viral, then I understand LinkedIn. If they do not, then I'm like back where I was when I wasn't generating leads and like whatever else. And it was like bang, 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 like 2 million impressions over those 3 posts. And like, and that was it. It was like, I remember telling Diana, my co-founder, I'm like, man, like I can write these posts. Like I get this now. Like I understand why they're good. I understand why no one else can sort of write this stuff, and I understand why people want to read it from me, right? From the guy who just did it, right? There's very few people who are willing to be as transparent as I am, that are as far along as I am, that can write the stuff that I write.
So if I summarized it, tell me if I understood correctly. It's writing about the tough decisions that you've made as a leader, or the tough calls that you've had to go through, and what you learned in the process of that. And it's things that sometimes it's hard to talk about with large group of people, and not being afraid, right? Being able to share.
I mean,
and what did you learn along the way?
So yeah, that I think would qualify as the best posts. Unfortunately, there's not enough of that happening to where that can be all that you talk about. Or maybe fortunately, I don't think people want like, people want to be, here's why I think it works so well. I'm reporting the whole journey. When something great happens, I talk about it. When something shitty happens, I am incredibly brutally honest about it and why. And like, I'll give you an example of why I think it's relatively protected and like why most founders can't be this open about stuff. So, a month ago, we woke up one day and we were like, man, like with all of these changes that have happened in the world, it's like the actual volume going through our business is like half of what it was 18 months ago, but the team size is still the same. And like, we don't know what levers we could pull to accelerate stuff.
Right.
So like whenever you, I mean, look, I've had to go through 3 of these. Whenever you wake up and you're like, I can do the same thing with half of the team size, and I'm very clearly not in the product market fit scenario that I was 2 years ago. My fault, I guess, but like, you know what you have to do. So the executive team's like, you can't post about it. I'm like, okay, so everyone at this company knows that I'm doing this radical work in public thing. And like everyone at this company knows that it's doing more for us than anything ever has, right? Period. They're like, okay, tone it down. I'm like, tone what down? They're like, don't say that we fell out of product market fit, and don't say that we were unable to solve the churn problem. And that's what ultimately led to the layoffs. And I was like, guys, first of all, who are we trying to protect by this? So by the way, this last